Hey, all, welcome to Share Trek. This is Raj here, friends. I'm very happy to have Sandeep back again. He has agreed to come back to present SnowFlake Inc., which is another cloud-based company. And these days, you know that cloud and AI, everything is the flavor of the market. So I'm really excited that Sandeep is going to present that. So I'm going to request Sandeep to make the presentation. I do not have much to talk about SnowFlake because I've been trying to understand the business of SnowFlake, and I need a little more time to understand more about it. So we're going to look more at the financials and those aspects, which is basically Sandeep's area. So without further ado, I'd like to introduce Sandeep. And Sandeep, welcome to the show. And I hope you have had a great week so far.
Oh, thank you for having me, Raj. The week has been wonderful. Welcome, Share Trek Universe. Thank you for having me back. And let's just jump right in. As most of you might know, there's a lot of uncertainty in the market. Now that we have oil at $93 a barrel, we have an auto worker strike about to happen, Hollywood strikes happening. We've got so much uncertainty. We don't know what's going on with central banks, whether the interest rates are going to go higher for how much longer, if they're even going to go and add even more rate hikes. If the rate hikes are done, there's so much uncertainty. And hedge funds, institutional investors, retail investors like you and I are really, really feeling the uncertainty and pain. However, I do find, and a lot of you have seen, that one of the shining lights in so much uncertainty has been software companies. Software companies, especially those like Amazon with their AWS, like Microsoft, like some of the AI companies have been doing very well, like Salesforce. So, what a great way to take a look at some of the earnings, then to take a look at the wonderful company, SnowFlake. Now, some of you are wondering, SnowFlake, what does this do? What's up with this? They came into the limelight a little while ago, rather dubiously, because they were known as the company, one of the few IPOs that legendary investor Warren Buffett bought into, and the other dubious honor of being the one. There was headlines going around for a while of the CEO making $110 million a month. That was very crazily being thrown around the interwebs. But a lot of people don't really know too much as to what SnowFlake is. And after looking through their earnings, after looking through their earnings call, their statement, I think I have a better idea of what SnowFlake does. So SnowFlake, it's a cloud data warehouse and cloud support service that works with data integration, and their largest clients are actually AWS, Amazon Web Services, and Microsoft's cloud service, Azure. And if we go through the most recent earnings, I have to tell you, Raj, I have to tell you, Share Trek world, this is probably one of the most disappointing and one of the least confident earnings I have ever read in a while. The entire earnings just screamed lack of confidence and we don't know what we're doing, which was so incredibly surprising to me. What I did while I was reading the earnings, when I was reading the earnings statement, I read the word "we think" and "I think" so frequently that I did a Control F search, and the words "we think" and "I think" came up 41 times, which is so surprising to me. This company, rather than giving confidence, rather than trying to sell the stock, they were saying, "We think this. I think the answer is this," to people who are asking very legitimate, very good questions. There was so much lack of certainty. And in a world where a lot of investors want certainty, a lot of investors want to know that their money is being safe and this company is using their money for growth, company really didn't do a good job of selling me, at least, on that. Data companies they gave such an impression of uncertainty about their strategies. Like, what all in the earnings that they were saying was that we are confident that data is important, and we are doing this with data, we are doing that with data. In the earnings, they said we're using language models for our data, and then they said we are using analysts for this data, and we are using data in this way, that way, and the other way. It was such a lack of direction, such a lack of certainty by the CEO. It was just very disappointing, in my opinion. However, there was a lot of shining light that I found in their earnings. And that was actually not so much in the software sector, but in other sectors. One very important point that I found while reading, and when the CEO was asked about chips and semiconductors, he said that we want to buy more NVIDIA chips, but we can't get them. We like those. They're good, but we can't get them. So we are going to wait on them. They are so certain that they can't get these chips because Microsoft, because Meta, because other platforms are picking them up, that they have just stopped trying. Maybe this means that, hey, the chip ramp is going to catch up, and this company, these software companies, are confident that they can eventually get them. Maybe this shows that even Microsoft, this great company that employs these people and gives them their business to do something with their data, is so unsure of what to do with data. But maybe this means that chips are still doing all right. And another sector that I found very surprisingly, Raj, from these earnings to do very well was healthcare and biotech. Now, I know ShareTrek is initially predominantly a genomics channel, which brings me much delight and excitement to know that biotechnology, genomics being one of the biotech firms, is adopting technology, is adopting data and AI better than some of these others. The CEO was saying that healthcare and biotech used to be their number 4 and number 5 sector in terms of big data and cloud integration. However, now they're going up way far ahead, which is great. Now, from conversation with folks in the healthcare industry, a lot of the time, healthcare is one of those industries that folks don't integrate too much technology with. And some of you might have the idea of an older person, older man or woman who is a family doctor saying, what? AI? I don't need that. I have pen and paper. However, the reality is very different. People are adopting AI in healthcare, in biotech, which makes me much more intrigued, much more curious about these sectors. There's a lot of uncertainty in software. There's a lot of uncertainty and maybe overvaluation in a lot of these software AI companies like SnowFlake. However, we know from NVIDIA's earnings that their servers, their AI chips are making money. And I'd be interested in delving further into how the biotech firms, how the healthcare firms are integrating AI, integrating data, integrating cloud services and servers. I'd be very curious to find out how that's going on. But if we were to take a look, because this is very focused on financials. If you were to take a look at the financials of SnowFlake, I'm afraid that the great growth story of software is not that great in SnowFlake. They've had a decline in revenue in their most recent earnings in the most recent quarter, 3 months, of 16.75%. Their growth rate has fallen heavily. Their consensus revenue guidance of 670 million, which from viewing the prior earnings was already pretty low. They came in even lower, which is by 5 million, which is surprising. Their stock has been incredibly punished. And as I was going through their financials, as I was going through their earnings, I found what I found was surprising, was shocking almost, that they were spending on things while not growing at all. Here are just a few highlights that I wrote down. Their G&A costs, general administrative costs, went up, increased by 14%. And they cited much of that was to administrative expenses and stock-based compensation. Sales and marketing expenses up 25% in the quarter. They cited that being because of increase in benefits, bonuses, and stock-based compensation. R&D, research and development, which you'd expect this to go up quite a bit because of the attention to AI, the attention to servers, to clouds. R&D surged 71% in this quarter, which SnowFlake itself said was attributed to more staff, research bonuses, and stock-based compensation. If you're noticing a little pattern here of stock-based compensation, that is a term that is brought up many times in their earnings. This company is rewarding its employees, which good for their employees, good for anybody working at SnowFlake. I'm very happy for you. I hope you do very well. That's wonderful. But to shareholders, a lot of them don't want to, just speaking from the Wall Street perspective, a lot of shareholders do not want to see that, hey, you're paying all in all these bonuses, but you're not returning shareholder value. Wall Street is sometimes very, very jaded and rigid in their thinking. It's like, hey, how does this make me money now? How does this make me money 6 months from now? And SnowFlake is not doing that. SnowFlake is not returning shareholder value. In fact, they are spending much more. If we were to take a look at just their ratios, their PE ratio, they have a forward PE of 233. And their current PE, their current price of earnings, is negative. They are not making money. It's trading on future earnings, and their future earnings are not looking bright. Many of you might remember when Netflix delivered that abysmal earnings just about a year and a half ago. And I read through that earnings, and it was shocking because that was a growth company that stopped growing. SnowFlake is a growth company that has stopped growing, which is kind of alarming. I'm not very impressed with these earnings. And Warren Buffett, this was one of the only IPOs that he had ever bought. It returned him at one point, I looked this up, it returned about $150 billion of profit. That has all but evaporated. Today, The company trades for about $160 a share. Buffett bought at about $120 a share. In all those years, all those decades, he would have been better buying just about any index, including the IWM Russell 2000. This was not a very appealing earnings to me. However, I was very happy to read these earnings because although the CEO did not scream any bit of confidence, although the sales pitch and the numbers looked, in my eyes, very poor, although this makes me question the long-term future of software and makes me question if companies like Microsoft might be overvalued, and maybe some of these software companies are wondering, okay, we have all this money, we have all these clients, what do we do with them? How do we sell this to them? We'll just say, hey, we're doing language models, we're doing data models, we're just doing busy work to make it seem like we're important. Although that was not appealing, what was nice was for me to read that, hey, healthcare and biotech seems like they got something brewing in their very nice, very savory, very tasty stew going on. They got a whole variety of vegetables in there. And I'd be interested in finding out what type of spices they add later. And of course, this makes me more intrigued about companies like NVIDIA, now. But that's what I picked up from this very, very intriguing earnings, which I'm happy I read. We don't always want to just read happy, positive earnings. Sometimes these earnings from companies which are less appealing and more so intriguing can reveal much more. But do you have any thoughts about that, Raj? I'd really like to hear if you thought what you thought about what I picked up during this short little earnings segment on this wonderful, amazing company that has fallen from grace, growth company that has seemed to have stopped growing, called SnowFlake.
Yeah, Sandeep. Yeah, I was following through, and when I started off, as I said, I didn't have any idea about what SnowFlake is doing, because to be honest, I tried to prepare for this video, and what I saw was something similar to what I thought Oracle is. I'll just share a screen with you to show you what I was seeing in. So this is what I was looking at in the SnowFlake website.
Nice.
And I looked at this diagram. It says you got database storage, and then you got query processing, and then you got cloud services. And I'm thinking, how is this different from Oracle? In fact, Oracle has a world-class database storage. It's got world-class query processing, and on top of it, it has got a lot of applications which are well established in the industry, in ERP, enterprise resource planning, in various areas, various industries as well. And they also offer cloud services. So I was thinking, what's the unique offering from SnowFlake? And from my limited understanding, I couldn't find anything special about SnowFlake. So I wanted to hear from you. And when you started talking about SnowFlake and you went through their earnings, I started having the same shrinking fear. You know, I'm in my back of my mind, I'm thinking about Ginkgo Bioworks, okay? Because Ginkgo Bioworks also has the same kind of a feel. Sometimes I feel that, oh, this is great and it's going to be fantastic. And then sometimes when I look at the CEO interview, like the last interview by the CEO, I don't think it was very impressive. And then the share prices fell. So we really don't know, because a lot of these technologies are so way out there. We assume that people have put billions and billions of dollars into it, so there must be something to it. And unless there's a news article where somebody slams the company and says that it is hocus pocus, we won't know about it. So I'm thinking that would I invest in SnowFlake? Probably not, because in my age factor, like if I was a young person, if I was 25 or 26 and I have some money lying around, my risk appetite would have been higher. But as a retiree, I would not touch Snowflake with a barge pole, because I would rather have preservation of my capital. And then I would like to have some dividends coming in on a ongoing basis. And then I would like to see a little bit of capital growth if possible. But the most important thing is capital preservation and dividends. Those are the two things, and it will be a long-term hold that I would be looking at. So our viewers, Sandeep, I think are in various age profiles. Those who are in my age profile may not find Snowflake appetizing, but those who are younger, and especially those who are techies, who are working in AI, working in cutting-edge development and all, they would probably appreciate the nuances of what Snowflake does, which is not apparent to oldies like me. And they might also have the risk appetite to invest now and wait for 10, 15, 20 years to get the returns.
Yes.
So that's how I look at this. And again, thanks for giving us a honest breakdown of what you think about Snowflake. And yeah, my point to the viewers is that, guys, we have this new program that we are creating in our channel, Sandeep and I. And we are actively looking at your engagement levels, and we are trying to tweak this program so that we can find what it is that you like. So unless you give us comments and guide us, we are going to be changing our format, Sandeep and I, trying to get it into a more engaging format so that you are able to watch longer.
Yes, please.
The last few videos have been a bit encouraging, but we want to keep it more crisp and to the point, and that's what we tried to do today. And we look forward to your feedback. Sandeep, do you want to say anything?
Yes, please. This channel, the Share Trek universe, is yours. So would you want to see us go through more of the financial statements? Do you want to see more high-risk companies? Do you want to see more conservative investing companies like Raj will look at, or more higher-risk companies like some of the younger, more out there whippersnapper investors like Warren Buffett would look at, like Snowflake? Of course, Warren Buffett, this only makes up about 0.3% of his portfolio, but what do you like to see? And we'll work to you. Do you want to see more AI, more genomics sort of companies? We're at your service, so please let us know. And
that's exactly that's exactly right, Sandeep, because I'm talking to the viewers also. As you guys can see, we have a lot of traction for HIV videos, and at the same time, we are a genomic channel. We want to remain a genomic channel and also do HIV videos to serve a population which is desperately looking for hope and information. I'm really proud that we are able to give them all those things, and I want to continue doing that. But at heart, we are genomic investors. Our heart is in genomic investment and in the stock market. That's where we come from. That's where our original audience came from. And we want to do you good in that area. And we really would like to hear from you what you want to see. Because at this point of time, in the genomics watch list that we have, only Bluebird and CRISPR Therapeutics have anything at all happening this year, which is Exaccell and OOCell. And the other one, which is having something or the other happening on an ongoing basis, is Ginkgo Bioworks, which I'm always cautiously optimistic about, because sometimes I'm very inspired and sometimes I feel that it is snake oil. So I'm somewhere in between those two at all points of time. And I watch, and those are the things. Yeah, those are the things. And then, of course, today we picked up Snowflake to talk about. So we are exploring various different shares that we want to talk to you about. We are developing alternate watch list of shares. So guys, please give us your feedback, and we'll be really happy to improve our offerings for you. So with that said, I think I would like to bring this video to an end. And friends, you have been very supportive of us. We are approaching 5,000 subscribers. So if you have not yet subscribed, please subscribe and help us grow this channel. And also, if you are already a subscriber and you would like to help us to grow further, please become a member by pressing the join button. It'll be much appreciated. And with that, we'll see you next. Bye for now.